It's all about the debt ceiling. The stock market is treading water, but what about the Treasury market? The stock market looks healthy, but the Treasury market is nearing the lowest levels it has seen in the past 20 years. As you'll see when we get into the numbers, the equity markets have performed very well so far this year, and after a healthy up week this past week for the riskiest assets, most of our metrics are showing a healthy appetite for risk exposure. So what are we seeing now in the equity, bond, gold, and crypto markets? So if we look back over the past week, you can see that we had very nice rally across all asset classes here, with the riskiest assets, the NASDAQ 100 and ARK Innovation, heading the pack higher. So this is a very healthy end to the week. Looks great. And over the past month, again, a very healthy look with the riskiest assets up the most. Now the Dow and the small caps finished in the negative territory, but that doesn't concern me. I like to see the risk assets going higher. And if we look back year to date, this looks great. This looks very healthy. Look at this. You've got ARK Invest in the NASDAQ finishing the highest, followed by the S&P, followed by small caps in the Dow. This looks very, very healthy over the longer term. And what if we look at bottom dynamics? Well, I said last week, it looks like we're going to go higher from here. And that's in fact what happened. You can see that the safety confidence is very low, which typically indicates that the risk assets are going to move higher. The bottom forming and bottom confirmation indicators are just kind of going nowhere, sideways to nowhere. And the confidence level is dropping as the market goes higher. So combination of the confidence level dropping as the market goes higher and the safety confidence level starting to move up gives me a little bit of pause going into next week. And then there's always the debt ceiling, which could blow things up in a big way. So we'll have to wait and see what happens. I'm not willing to try and pick which way this is going to go, but if I was forced to, I would say likely down. And if we look at risk versus opportunity, you can see that the risk level, this red line, has been just sliding downward. This is very, very good looking. And risk acceleration is down here at extremely low levels. And the opportunity level is pointing higher. So from this graph, looks like we're going higher next week. Boy, is that a conflict. We'll have to see how this really plays out. And if we look at equity versus safety, this looks fabulous. Look at this. NASDAQ 100 in first place for the past 3 weeks. This is great. I do like the fact that cash is moving lower. So if we look at it, cash moved up here, stayed up here, and now it's starting to drop. This is very good. And if we look at small caps, they were down here in the bottom, and now they've jumped up here into second place. So this is very healthy. And I also like the fact that the Dow and the SPY are moving up here where they were at the bottom before. So this is starting to look very, very healthy in the shorter term. And how does this show up with the buying and selling pressure? Well, you can see that for quite a while with the Dow, the selling pressure was well above the buying pressure, and now they're starting to trade places, hopefully. But the price action hasn't been very good. We had a nice rally here, kind of went nowhere and then down. So still not in a good place, and I don't think we will be in a good place until we get past this debt ceiling crisis. S&P 500, a little bit of a different story. Nice rally, sideways to slightly up, and now up again at new recent highs. This is a fairly good looking picture, but you can see there's nothing definitive going on here with the buying and selling pressure, except back here where the selling pressure was well above the buying pressure, but now they're just kind of nowhere. And what about the NASDAQ 100? Well, if we look at the NASDAQ 100, no surprise here. It went up very nicely, kind of sideways, and now we've had a very nice rally again, and the buying pressure is nicely above the selling pressure. So this looks healthy. What about the Russell 2000? Not much information here in the buying and selling pressure, just kind of trading places all the way across, and not much going on here. Nice rally back here, A slightly downward move here, slightly upward move here, but very jagged performance, nothing definitive. And ARK Innovation has not looked good. You can see we were falling back here, but we've been on a fairly nice rally lately, and you can see that the buying pressure is above the selling pressure, but it looks like they're about to trade places. So again, I don't think that any of these are going to do much until we get past this debt ceiling crisis. If we look at sector rankings, they tell a very interesting story. The top table is showing the sector rankings for last week, a week ago, and the bottom table is showing the sector rankings for Friday, this past Friday, which was yesterday. I'm recording this on Saturday. And you can see a week ago, we had all very nice risk assets ranked up here in the top rankings. This is what you want to see. It's exactly what you want to see. Consumer discretionary was up here. We've got Bitcoin, technology, innovation, ARK Innovation up here, semiconductors here, and cash was down here. This looks very good. Well, let's fast forward to yesterday. And what do we see now? Same picture here, technology and innovation up here, but you can see that cash has really moved lower. Consumer staples have really moved lower. This is great. Gold has moved lower. Love this. So this is looking even healthier this week than last week, but we could get a surprise next week. We just won't know until we get there. And what if we look at sector rank acceleration? So these move fairly quickly, but you can see that last week on this top table, we had innovation, ARK ranked number 1. This is great. Interestingly enough, we had Treasuries ranked up here, long-term Treasuries. So we'll have to see how that plays out. It kind of doesn't make sense to me given the recent price action, though, but we'll see how this goes. And then we had technology and emerging markets and so on, and consumer discretionary. Well, let's fast forward to yesterday. So this bottom table shows us what things looked like yesterday. And again, ARK Innovation ranked number 1. We've got semiconductors ranked number 2, so this is very healthy. 20-year Treasuries staying stubbornly up here. Don't know what that's about. What I don't like here is that consumer discretionary has fallen down here, and cash has moved up higher, and gold has moved up higher. Now, consumer staples, I like the fact that they're right down here at the bottom. So we really kind of have a mixed picture here based on the acceleration statistics. And let's take a look at how Treasuries performed over this last week. Well, you can see not very good. The highest risk Treasuries, EDV and TLT, finished dead last. And the shortest duration Treasuries, SHY, finished first. This is a very unhealthy looking Treasury market, which is a little bit at odds with what we saw in the sector rankings and rank acceleration. And what about that yield curve? Yep. I was really hoping this would go the other way, but it became more inverted last week. And this is not good. We really need to see this go from being 61 basis points inverted to above 0, and we're a long way from that. So don't know quite what's going to happen here. Now, based on the recent Treasury action and with Treasuries dropping, are Treasuries a bargain? Well, take a look. If we look at SHV, which are Treasuries with a duration of less than a year, SHY, 1 to 3 years, IEI, 3 to 7 years, IEF, 7 to 10 years, and TLT, 20 years, the longer duration Treasuries are trading right now. TLT's trading at 85% of its maximum low. So it's down 37, almost 38% with its current maximum loss, when its worst case maximum loss was 44%. This is starting to look like, man, maybe these are becoming a bargain. And then if you look at IEF, it's not quite as close to its maximum low. If you look at IEI, a little bit further away from its maximum low. And then SHY, 1 to 3 year Treasuries, shorter term Treasuries, are even further away from their maximum low. So we could be heading into an area where these things are really a bargain and have a lot of upside going forward. But I won't know until we get past the debt ceiling. And, you know, if you look at SHV, I'm a little bit concerned because if the government does default on its obligations, these will be the ones that they can't pay, the ones that are less a year. And more particularly, the T-bills, the 90-day duration Treasuries, are the ones that they might not be able to pay. So if you look at SHV's holdings, 77, almost 78% of its holdings are Treasury bills, which have a duration of anywhere, well, the ones that they're holding have a duration of anywhere from almost 0 to 90 days. Now, they've laddered them, so they're not all about to come due in the next few weeks. Some of these won't come due for 3 months. So it'll be interesting to see what happens to the price of SHV if the government defaults, but I really hope we don't get to see it. And how is this all showing up in the buying and selling pressure for Treasuries? Now, I don't normally show 1 to 3 year short-term Treasuries, but I am here because you can see the price has been collapsing and the selling pressure is going through the roof. What about 3 to 7 year intermediate Treasuries? Same picture, collapsing price, selling pressure going through the roof. 7 to 10 year intermediate to long Treasuries, price collapsing, selling pressure through the roof. 20-year long bonds, price falling more steadily, but actually collapsing more recently, and selling pressure going through the roof. What if we take a look at gold? Well, gold, kind of nowhere, kind of a nothing burger here, as they say. You can see it rallied back here, pulled back, really shot up here, and now has basically collapsed with a recent small rally. But you can see that the selling pressure is still well above the buying pressure. So no flight to gold yet. And how about Bitcoin? Well, Bitcoin kind of looks somewhat similar to gold. Had a very nice rally here, a pullback, somewhat of a rally, and another pullback. And the selling pressure is above the buying pressure, but you can see that it's collapsing as the buying pressure comes up. So no idea where this is going, but I have to say, blockchain worked flawlessly as the banking contagion started to happen. So maybe we'll eventually see a flight to Bitcoin, but it's going to take a long time for us to get past all the regulatory hurdles and all the banks trying to fight Bitcoin and cryptocurrencies in general, because these technologies could put them out of business. If we look over the longer time frames like year to date, the equity markets continue to look very healthy. And in the shorter term, they appear to show good promise. But we still need to get past the disagreements in Washington over the debt ceiling in the next few weeks. Treasuries look like they could be at or near their 20-year maximum losses. Does this mean they're ripe to buy right now? There's really no way to tell, but if the U.S. government defaults on its debt obligations, all bets are off unless the investors flock to longer duration Treasuries as a way to bridge the gap while our elected officials in Washington figure it out. This is exactly what happened in 2011, but that doesn't mean it's going to go that way this time. The debt ceiling is a big wild card over the next several weeks, and it's scaring many investors. But we're still staying long in our investment bias for now. I'm Calvin Rose, and thank you for watching Invest Smarter this week. That's all for now.